Let's get to my next guest. He's Bill Farren-Price, CEO and founder of PPI, Petroleum Policy Intelligence. Bill, thank you for joining us.
Thank you.
All right, it does seem that they're actually happy. Between 80 and 90, even 70 and 80, everyone's happy.
Yeah, I think that's about right. I mean, we've seen this price range holding in since October. The fact is that as long as that's holding in there, they are unlikely to want to rock the boat and change output policy. So they're going to stay steady this meeting. Of course, they're also mindful of the fact that the second quarter is seasonally usually weak. You see some refineries go into turnaround, so there's less demand for oil. And they want to get through this little weak patch and then see what the second half looks like. And all the evidence is so far the second half looks pretty good.
But the big unknown is, of course, how much will economies grow, how much or how quickly will they pull out those exit plans? And this is what these guys here presumably are talking about.
Yeah, we've seen a lot of movement on the US dollar over the last 24 hours in oil. And it's certainly the case that if you see an exit or an early exit from stimulus programs in the OECD, and also even in China, that could have a big impact on how oil trades in the second half. But the underlying story is that the second half looks pretty balanced given current OPEC production, and that's what's giving them a little bit of encouragement in that.
Now, compliance, this is the other story, the behind-the-scenes story. 1.5 million barrels extra of what they say demand is out there, but it seems that nobody has a problem with it.
I don't think that there's any desire to really have that discussion. It's going to be a difficult discussion, and they probably will have to have it at some point. But you might as well wait until the demand picks up in the second half and we start to see some marginal improvement in the US and also, you know, the extra oil going into China and India. And I think that that's what they want to do.
Now, Bill, the other very interesting story is when we caught up with the Iraqi oil minister yesterday, he was saying he wants to produce 12 million barrels in the next 5 to 6 years. That would make it the biggest producer in OPEC. How realizable is that?
Well, you know, it's an amazing number that he's come up with. It's a transformational number, but I think even if they more realistically achieve about half of that, and Iraq comes up towards 5 to 6 million barrels per day, that will be an enormous achievement, and that will transform global balances for the next 10 years, and it will have a big impact on OPEC as well, because they'll have to work out at some point how to integrate that into their production targets.
And this is achievable. The country has had so much conflict, of course, that at the moment they don't even have quotas.
Well, we're still waiting for a full count of the election results, but early indications seem to be that Prime Minister Maliki has done reasonably well. And if so, I think that will cause a lot of the IOCs to be pretty happy, because they will expect to see some sort of policy continuity there. But I don't think anybody underestimates the headwinds to doing business in Iraq's oil sector.